Hey, what's up everyone? This is Silver Slayer. Thank you for tuning into this video. So, right now, gold and silver in the green. Gold at $1,630, up $39.50. Silver, $14.63, up 61 cents on the day. So, with that said, I have a couple articles. First off, we're going to be talking about silver insanity, how these markets can be driving people insane just from the extreme volatility, and how silver hasn't really rolled over and had that rally that people are expecting or so eagerly waiting for, and also how the Fed's coronavirus response is good for gold. So their statement is going to make the markets more bullish. So before we start, I wanted to mention that JM Bullion now has no order minimums and only 5 business day delays. So that's good news. It looks like the mints are catching up. I'm not sure what ABMEX says so far, but if you do want to buy some silver, there's not a $400 minimum anymore. There's not a 15-day waiting fee. And also make sure to smash that like button, because I post daily videos and I'm busting my butt every single day to make the best content for you guys. So make sure you smash the like button. Make sure you support channels like this. Not only just mine, but every silver channel out there busting their butt to make good content and to keep everyone informed in the world of precious metals. So with that said, let's jump into this video. So silver is real money, not a debt-based fiat currency that will eventually fail. Bam, right there. End of the video. We could leave it right there. Silver is bullion, or silver bullion production requires capital and effort to mine and refine. It's not just made out of thin air like US dollars are. We use it for solar panels, iPhones, cruise missiles, and thousands of other items. Silver is monetary sanity. Prices for silver rise as currency units are devalued. Silver sold for $1.29 in the 1960s. Today's COMEX silver price is around $16 because dollars buy less. Prices for physical silver are much higher. The continual deviation or devaluation benefits the political and financial elite who own most paper assets, stocks, and bonds. The bottom 90% pay higher prices for necessities plus interest on their debts. Savings in silver coins will offset devaluation and loss of purchasing power. So the dollar's lost 98% of its purchasing power due to hyperinflation. Silver's one way to store your wealth, to preserve your wealth into something that holds its value, right? So why do dollars buy less? The banking cartel borrows and prints too many of them into existence. More debt means more dollars into circulation. See, we're trying to get ourselves out of debt by replacing it with more debt. It's like trying to pay off a credit card with another credit card. It's not going to work. We're just digging ourselves in a hole deeper, and that's why our monetary system is going to fail. And that's why I hope you are investing in the gold and silver to protect you from this, because there's no solution. There's no way that we're going to make some different monetary system. Cryptocurrency is not going to work, obviously. You know, there's no solution. All there is an alternative, which is precious metals. So how much debt have our bankers created? The St. Louis Fed tracked total credit market debt. Current U.S. debt's around $74 trillion. Over $500,000 fiat dollars per U.S. worker. Insanity. The debt will be extinguished via default or hyperinflation. Probably default. Hyperinflation is not going to work, in my opinion. I'm curious what you think, though. Total debt increases rapidly. But one might think the debt increases because the population rises every year. To prove otherwise, divide total credit market debt by U.S. population to see the rapid rise in population-adjusted debt. So do you remember a cup of restaurant coffee cost 10 cents in the 1960s? Today, a coffee costs $2. That's because the dollar's losing its purchasing power. What you can buy with right now, maybe you can buy a Tesla for $50,000, but in 30 years from now, you won't be able to buy a Tesla for $50,000. Can you see how the dollar's losing its purchasing power? That's why you need to invest into gold and silver. A pack of Marlboros cost 25 cents in the 1960s. Today, the pack of cigs costs $12. A new truck in the 1960s cost $2,000. Today, a new truck costs $50,000 to $80,000. See, what about silver, though? We can talk about that all day, but that's not going to get us anywhere because that's a dead end, right? Because money's worthless. So take the above population adjusted total credit market debt and price it in silver in ounces. Use the average of daily closing prices for each year to create an annual price. Debt increases faster than the price of silver, which is no surprise. The world runs on credit and debt, and currencies are debt, right? We're running a digital world now. Everything's a swipe of a card. You never see anyone pay with cash anymore. It's all swiping of a card. We're going into the digital age. The banking cartel creates billions in new debt every day. Silver prices, except in the 1970s, have not kept the pace with debt, with creation, and this will change. So, conclusion from above. Debt adjusted for population increases faster than silver prices. Fake money has prevailed since 1980 versus real money, which is silver. Silver prices will catch up someday, perhaps soon, when fake money is recognized for what it isn't. Investors and savers will scramble to buy a tiny supply of real silver and bid for far higher prices. Palladium prices spiked higher after defying expectations. Perhaps a parabolic palladium price increase foreshadows silver price in the next 1 to 5 years. So, let's be conservative in our expectations. Population will slowly increase. Use the past 10 years as a guide. Debt will increase unless you think bankers will change their behavior, which is definitely not going to happen. The silver to population adjusted ratio will rise up to the upper trend channel. However, the ratio could move far beyond the trend channel. So, using the mild and reasonable assumptions, the average price of silver could rise to $85 by 2025. That's a very bullish statement. Silver price spikes can be 3 times larger than the annual average price. And the silver price would be $250 without assuming global war, hyperinflation, global pandemic, central banks fighting recession with quarter of QE forever, which is quantitative easing, electing a tax and spend socialist in 2020, whatever the case is, the 2020 presidential election. Silver priced at $80 and $250 per ounce. Total insanity? Probably not. In our world, prices are likely. Consider, Tesla stock closed at $917 on February 19th. That price made Tesla market capitalization larger than some Ford, GM, and Fiat Chrysler plus annual global silver production. The Fed added over $900 billion into its balance sheet in 6 months, created out of thin air. The Fed is monetizing U.S. government debt, and, if the health departments don't test for COVID-19, they can legitimately report no confirmed cases. No worries, nothing to move on. Out of sight, out of mind. China has closed many businesses due to COVID-19. Chinese debts and cash flow requirements are huge, but they have assured us economic and pandemic consequences will be minimal. Really? So, Tesla stock was at $179 on June 3rd, 2019, and then $917 on February 19th, 2020. Amazing. Amazon stock was $300 in January 2015, and then $2,170 in February 2020. What goes too high can crash. Tesla stock at $917 is crazier than $100 silver in 2025. Buy silver and avoid overvalued tech stocks. I'm always talking about ETFs, stock markets. I invest in Tesla myself, so I can't, I'm not going to speak to contradicting on this, but it's true. Silver is real money. If Tesla can reach $917 that quick, then $100 silver in 5 years is definitely possible, right? Definitely possible. Definitely. So, in 1945, the Argentine peso has devalued against the falling US dollar by 10 trillion to 1. Insane or just bad management? Global debt exceeds 250 trillion. Can the global economy support interest payments of 5% on the 250 trillion? What about only 1% interest? Are near zero interest rates necessary to avoid insolvency? Global central banks will be forced to print how many trillions of debt-based dollars to keep us until rates are zero? Gold and silver prices will rise. It's as blatant as that, right? It's as blatant as that. So, when we're looking at all this, it's almost insane. It's almost insane to think that silver will not explode, right? We could be seeing $100 silver, $250 silver. And that's not out of the realm of impossible. That's definitely possible. And that's why I hope you can see where silver prices are headed, and not only that, but looking at the market and seeing the potential, the beneficial factors, the fundamental purpose that silver has, especially compared to the dollar. So anyways, I'm going to wrap this video up here. Like I said, the link to this article will be in the description. I'm going to turn this into another video, so stay tuned for that as well. This article is very well, so I kind of stayed on this for a while, so I just wanted to make this one separate video. So anyways, thanks for tuning into this video. Make sure to smash that like button, subscribe for new, because I post daily videos. This was Silver Slayer. I'm out. Peace.